Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Mongolian Mining Corporation Annual Report. Mongolian Mining Corporation offers a diverse range of services and businesses. At the core of its operations are mining activities, specifically extracting coking coal products from its two open-pit mines, Ukhakudeg and Barun Naran, located in South Gobi Province of Mongolia. In addition to mining, the company is involved in various other sectors. It manages railway projects, operates airports, and provides water exploration and supply management services. Furthermore, it oversees power supply project management activities, which suggests a significant focus on infrastructure development. The corporation also engages in coal trading and machinery equipment trading, indicating its role as a key player in the supply chain of mining-related goods and services. Overall, Mongolian Mining Corporation's business portfolio is extensive, encompassing multiple aspects of the mining industry and related sectors. Mongolian Mining Corporation market capitalization of 10 billion is significantly larger than the average industry peer of roughly 1 billion. This shows that Mongolian Mining Corporation holds a significant advantage in their industry. Mongolian Mining Corporation trades at a higher price-to-earnings ratio of 191 times, and a higher price-to-book ratio of 1.03 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 35% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline for a company can be attributed to several key factors. On the growth side, the surge in gold prices in 2025 was a significant contributor, as well as the commencement of commercial gold production at the Bayan Khundii mine and the increase in coal production from various mines. The diversification of revenue streams through agent sales arrangements also played a crucial role, with notable increases in revenue from this channel. In addition to these factors, the company's ability to broaden its revenue base and reduce exposure to single commodity cycles was another key driver of growth. Furthermore, the shift towards mid-ash semi-hard coking coal, MASHCC, sales, which have higher margins than thermal coal, also contributed to revenue growth. On the decline side, challenging market conditions in China, particularly for coking coal, were a major factor. The decrease in coking coal prices due to ongoing challenges faced by the steel industry in China also had a negative impact on revenue. Furthermore, the decline in average selling price, ASP, for all washed coal products, and the decrease in metallurgical coal demand due to commercially viable alternatives in steel production contributed to revenue decline. Overall, these factors demonstrate that revenue growth or decline is often driven by a combination of external market conditions, internal operational changes, and strategic decisions made by the company. The company is indeed generating positive operating cash flow. This can be seen in the various financial metrics provided across different pages of the report. On page 20, it is stated that the net cash generated from operating activities for 2025 was $234,258, which is a significant increase from the previous year's figure of $223,491. Similarly, on page 83, the net operating cash flow for 2025 was reported to be $67,395, indicating a substantial improvement over the previous year's figure of $61,138. Furthermore, on page 85, it is mentioned that cash generated from operations for 2025 was $280,163, which is higher than the net cash generated from operating activities of $234,258. This discrepancy can be attributed to non-cash items such as depreciation and amortization. Lastly, the operating cash flow summary on page 114 provides a clear picture of the company's operating cash flow performance for both 2025 and 2024. According to this summary, the company generated $156,430 in operating cash flow for 2025, which is higher than the previous year's figure of $148,339. In conclusion, based on these financial metrics, it can be confidently stated that the company is generating positive operating cash flow, indicating a strong and stable financial position. The performance of various segments and regions within the company has shown mixed results. On a positive note, the gold and metals segment demonstrated improvement in 2025 compared to the previous year. Additionally, specific mine sites such as UHG and BN mines have also performed well. However, there are areas that require attention. The coal mining segment experienced significant revenue decreases across various categories, including washed hard coking coal, mid-ash semi-hard coking coal, and semi-soft coking coal. This decline in revenue indicates a poor performance of the coal mining segment in 2025 compared to 2024. Furthermore, Erdene Mongol LLC-M has faced regulatory issues, with 22 areas requiring corrective actions. While improvements are being initiated, this highlights the need for better compliance and management within the region. Management is optimistic about the company's outlook, expecting increased revenue from its gold and metals reporting segment in 2026. The company aims to diversify revenue sources and reduce reliance on single commodities. In terms of sustainability and social responsibility, management prioritizes people as key assets, with safety being the highest priority. The company is committed to fostering transparent and fair business practices, investing in technology for sustainable growth, and minimizing environmental impact through water use efficiency and ISO 461-2019 implementation. Management also emphasizes the importance of embedding ESG considerations into corporate strategy and decision-making, aligning sustainability targets with the United Nations Sustainable Development Goals, SDGs. The company is committed to reducing greenhouse gas, GHG, emissions where operationally and commercially feasible, replacing conventional diesel trucks with electric heavy-duty trucks on certain routes. In addition, management highlights the importance of protecting biodiversity, preserving ecosystems both within and beyond operational areas. The company's tailings management strategy involves dewatering and dry stacking, guided by applicable Mongolian legislation and the TSM protocol. Overall, management is focused on creating a sustainable future for the company, prioritizing people, safety, and environmental responsibility while driving revenue growth and diversification. The company has a history of rewarding its shareholders through various means. One such way is by paying dividends, which the company has done in the past. This indicates that the management is committed to sharing a portion of the profits with the investors. In addition to paying dividends, the company has also been actively buying back shares from the market. This strategic move not only boosts the earnings per share, but also sends a positive signal to the investors about the company's financial health and future prospects. The company has allocated significant funds for this purpose, demonstrating its commitment to creating value for its shareholders. While reviewing the extracted summaries, there is no clear indication of significant concerns regarding inventory buildup or supply chain disruption. However, some points may be indirectly related to these issues. For instance, on page 85, it's noted that there was an increase in inventories and a decrease in trade and other receivables due to this rise in inventory levels. Additionally, page 103 mentions the cost of inventories, which includes personnel expenses and transportation/stockpile losses. These points suggest some level of management attention being given to inventory-related matters. Despite these observations, it's essential to note that none of these references explicitly mention concerns about inventory buildup or supply chain disruption. That concludes the financial summary for Mongolian Mining Corporation. Feel free to comment below, and I will be happy to answer them when possible.